Hello, welcome back to Core Finance. I'm Matt Brown, joined by Connor Campbell, financial analyst at Spreadex, and we're going to look at the Dow. What a stellar year for the Dow. It's incredible.
I think it's up. I think I was looking yesterday, up 20% or like 19% since the start of the year, and obviously it's more if you go back to November. You go back to Trump's election, when then I guess it's probably more like 25% or something like that. It's had, it's in one of its slower periods. It's more sort of crawling towards all-time highs rather than rocketing towards them. But it's had these periods in the year before. People have been like, "Oh no, this is it for the Dow. It's going to start pulling back," and it hasn't. It's pretty much just kept going, which is why it's interesting. I guess you could argue if you look at the chart, those sort of weaker moments probably are around the Republican tax plan and the issues they've had with that. But as you saw with sort of the healthcare earlier in the year, obviously healthcare was less important to the Dow, and it was more a case of showing that they could get stuff done, which they couldn't. But even then, it did overcome that wobble. It sort of just keep going. Obviously, it is going to have to stop at some point. I guess it's a question of, well, does it stop before the end of the year? Does it go into next year? And I guess, at this current rate, it could well be up to, I guess, 23,800, 23,900 by the end of the year. It does seem to, have these moments of weakness and then bang, it's up another 1,000 points. From our clients' perspective, they have been quite heavily selling around the 23,600 mark. I think, I guess that is just maybe the safer choice at the moment, just fishing about for, well, has it peaked? Because it has, hit that 23,600 mark, a few weeks ago, then pulled back. And there doesn't necessarily seem to be a lot of good news on the horizon to keep it going. Obviously, it is proven recently that it doesn't necessarily need anything to keep it going. It will just keep going due to the amount of momentum it's built up. But we have seen that momentum slow. There is room for it to pull back towards 23,500, 23,400, and that's still up. The Dow can lose 1,000 points and it doesn't really mean anything, because it's still up so much this year. It would have to take a complete catastrophe for this in the next month for this not to be seen as a truly remarkable year for the Dow Jones. So, like I said, I think our clients are just looking for some kind of pullback. It can drop 100 points, and that's a nice return without the Dow Jones having to have really suffered anything or really incurred any bad news. There's sort of so much room for just these minor little dips for people to pick up nice bits of profit there.
And looking at the chart, I mean, do you think shorters or people that have been bearish of the Dow, maybe since October, have just kind of run out of steam? They can't short. They've seen it rally in their face again and again. Is it they just at the end of the year they want to shut up shop and say, look, I've tried to short the Dow, I can't make money on it.
It is interesting because you could argue it's harder to find a reason for it to keep going than not, beyond the fact that it has just kept going. Like, you've seen warnings about bubbles and the tech stock, whenever there seems to be a tech stock pullback, that can really hurt the Dow Jones. And we're heading into what could be it depends on how this retail period's been, I guess, for stuff like Apple, and how heading into the new year, those big landmark stocks, how have they coped, and how's Apple doing with their sort of iPhone sales and things like that. It's tough. It sort of just seems counterintuitive that it keeps going, but like you said, it has kept going, and I think more and more, I guess people are going to be like, oh, just leave it. Maybe I think you maybe see more and more people just moving away from it rather than shorting it or buying it, just being like, oh, just leave it for a bit. Because especially if you look at the last since the start of November, it's not been that fun a trade really, because it has crept slowly higher, but in such a way that it'd be hard to find much. It did seem like it was falling lower in the first half of November, and I guess there probably would have been a lot of people that started selling it then just because, finally is it going low, especially with something that, if the Republicans do quite definitively foul on the tax plan, and that's it. But then at the same time, it's like, if they succeed, that's great for the Dow Jones in the short term, but there have been so many comments that will the tax plan is so unpopular that when it comes to the midterms, and then say if the Republicans lose control post midterms, well then that's not great for the Dow Jones either. So there is sort of the tax plan at the moment is sort of, I guess, a double-edged sword. So I think it's a harder trade than it looks, just because it's logic would dictate it has to stop at some point.
Well, we have to stop there, but Dow Jones has turned boring. That probably means there's a lot of volatility around the corner. In the meantime, Connor, thank you very much for joining us.